So, anyways, I think I answered your question, but if not, just let me know.
You'd be able to increase purchasing power with the money that people already had, right?
Say again?
If you were to, I guess, raise the interest rates back to above negative, you would be able to increase purchasing power.
Well, yeah. Right now, I guess for people in the room that don't know, the Federal Reserve has interest rates at 0% or like 0.1%. And actually what that does is it basically tells the market that future goods have the same value as present goods. So there's really no difference in between. And when you look at past history, during the 1990s, there was something called the yen carry trade. And the same thing's happening to the dollar right now. In the yen carry trade, their interest rates, when they basically had a huge real estate or huge stock market bubble, much greater than ours, and it collapsed very violently. And to get around it, they employed quantitative easing, which is basically just money printing. And during this period, what people did, what smart money did, was basically you borrowed in yen, so you borrowed at 0%, and then you bought another asset, typically U.S. Treasuries, but it could be any asset. Say U.S. Treasuries at that time were making about 6%. So basically you could do arbitrage and then leverage on that, on the whole transaction. So it made a lot of money. Right now, the same thing is actually going to happen to the dollar, because basically that 0% interest rate is like a mark of shame. The European central bank's about 1 or 2%, but a lot of people didn't notice this, but a couple of weeks ago, or just last week, China actually opened up its for sovereign bonds. So basically they have Chinese treasury bonds that they're going to be selling out on the market, and there's going to be quite an appetite for them due to a lot of things that they're doing in the currency world. In other words, the U.S. dollar is what's called the reserve currency, and what that means is, like if Thailand and India, are trying to trade between countries, Thailand has the baht, India has the rupee. They actually don't use their currencies. They tend to use the dollar. Same thing between Russia and China. They use the dollar. So all these extra dollars are employed in these financial transactions. And what China and Russia are doing, because they fear the rampant inflation in the United States, is they're moving away. They're moving away from that, and they're trying to basically do deals in their own currencies. When that occurs, and the U.S. dollar is in a pretty unique situation, when that occurs, those dollars are then freed up, and they're out there. And what are they going to do? They're going to come back to the United States, or they're going to go anywhere else where anybody will take dollars, and they're going to buy assets. They're going to buy properties. They're going to buy. I hope it doesn't come down to the point where they're actually buying goods off the shelf. But that's actually, one of the things that is definitely very, very possible. Another thing, actually, just on the gold market, because I brought these up, but what a lot of people don't realize is that, I guess I'll share 2 facts with you folks. One is that the gold market in 2007 had a turnover of $20 trillion. $20 trillion. That's larger than the United States GDP. GDP, again, is gross national product, which is all of the transactions of every single good and service exchanged in the United States. So gold is the world's smallest major market. You can read, there's an article that will be referenced in here that basically goes into the gold market. But the other thing about gold is, this is 30 grams of gold. To get this coin, you have to process 1 ton of rock, 1 metric ton, so 2,000 pounds of rock to get 1 gram. So you need 31 grams of this to make this stick of gold. And the key thing about gold is, it's tied to basically these mining companies. It's not tied to governments producing. And all of the gold in the entire world, all of the gold ever mined since the Romans and far before that, would fit inside of a cube 20 meters by 20 meters by 20 meters. 20 yards by 20 yards by 20 yards. So it would pretty much more or less fill up this auditorium. That's all of the gold that exists in the world, period. So there's a lot going on these days in the gold and silver markets. I'm running for Congress, so I just talk about the things. But go ahead, Jay.
Could you explain that the Federal Reserve Board is just a corrupt private organization started in 1913? And did you also tell them that Congressman Ron Paul had 280 congressmen sign on to his bill to audit the Fed? It's never been audited.
Yeah, that's a great point, Jay. And the Federal Reserve, our nation. So basically, the Federal Reserve is a quasi-private bank. It's actually not really run by the government. It's run by people that are appointed by the government, and also it's actually owned by the banks. And what they do is they control the interest rates in the country, and they control the money supply. So they can create dollars whenever they want. They can buy assets whenever they want. And they control the interest rates. This has led again to boom-bust cycles throughout time. And what he's referring to is since the founding of the Federal Reserve in 1913, there really hasn't been a stringent audit. There's been no audit of the Federal Reserve. We literally don't know what's going on with it. Bloomberg, which is a financial reporting organization, does stocks and a lot of market coverage. They filed a Freedom of Information request against the Federal Reserve for $2 trillion in off-the-balance sheet transactions. These have not been reported back. It's been bouncing around the courts and everything. There is a bill in Congress right now called the Audit the Fed bill, which would audit the Federal Reserve, which is kind of a branch of federal government. And there's already 300 co-sponsors. So there's 435 members of Congress, and over 300 people have co-sponsored it. And the Senate, which has 100 senators, about 31 or 32, I forget which, have also co-sponsored the bill. So it means that it has a very high chance of passing. But what they've actually been doing with our money is we in some ways will be pretty revealing. Almost for certain they haven't been very good stewards of it. Next month there will actually be an End the Fed rally down in Philadelphia at the Federal Reserve Bank that I'll be a keynote speaker at, where we'll go into more detail on that. But yeah, good question. Go ahead.
I hope you don't mind reiterating, but what exactly is full production and how can it be achieved?
Okay, well, full production, everything goes back to scarcity. And this isn't reiterating at all, it's a good question. Everything goes back to scarcity of resources. We here in this world today, we have, this air, this is pretty much an abundant resource. But when you start looking at things, it doesn't have to be gold. It could be, iron to build iron, silicon to build computers and that type of thing. They're scarce resources. Your labor, when you work, is a scarce resource. So really to have full production, you have to decide between what goods to make. Like for instance, in Soviet Russia, in the 1920s, they tried to basically do a full-out socialist economy where they had central planning of everything. And what ended up happening was they allocated certain things, certain elements of their resources, like maybe they'd build tractors or something like that, but they build too many of them, and then they'd forget to make refrigerators. So pretty much what the free market does, and when you have a central planning body, in your government, they just simply can't do it. But when you have private companies, private firms, when you have people, basically exchanging things, because think about when you actually exchange something, when you give, somebody $5 for a lunch or something, the Keynesian economists actually view that as an equal trade. The goods are of equal value. But in reality, they're not. In reality, if you valued the $5 more than the meal, you would not pay it. You would just keep it and maybe spend it on something else. So you get a beneficial transaction when you agree to pay for something. It's not an equal transaction. There's always something of benefit being accrued. So again, back to full production, when you have a lot of firms competing against each other in a free market economy, that's what the end result will be. And what everything comes down to, and actually in a lot of ways, it's the history of the world. With the Industrial Revolution, what the Industrial Revolution brought was, for the first time in human history, it brought mass production of goods to the masses. Before that, like if you go back to, we'll use China again. If you go back to 200 BC, they had an emperor that united China. His name was Qin. It was the Qin dynasty. and he rode around on a chariot. 2,000 years later, in 1787, when